Welcome to Realty Real Talk. I am Ashley Borney, my co-host.
I'm Tyler Lunger with Coldwell Banker NHS Commercial.
And we are here with our agent, Stacy Fernandez, and lender, Dominic Arias with Premier Lending.
Yeah, thank you guys so much for having me. Super excited for this.
Yeah. So, Stacy, tell me how you guys got connected working together.
So actually, Dom had reached out and wanted to get coffee, and we sat down and had some coffee and talked about what he's doing in lending. And during our conversation, we kind of talked about some different tips for first-time home buyers and credit and all the good things that I think need to be touched on. So I'm really excited to have him here today.
Yeah, no, Stacy, again, thank you for having me. And I think, for a lot of first-time home buyers, there's a lot of misconceptions and things they need to be educated on. So I think this is a great session.
Yeah, we're definitely seeing a lot of first-time home buyers out and about now that it's spring and everybody's ready to get out in the nice temperatures. So I guess you want to go in a little bit of detail on some of the misconceptions that first-time home buyers have when they're getting into the market.
Yeah, sure. I mean, I think a huge one, when I'm talking to a lot of first-time home buyers is a misconception about down payment. Like a lot of them, they hold back because they think they need to be, constantly saving for this 20% down.
Mm-hmm.
And, really, that's not the case, right? As you guys know, and as I know well as being a lender, it's 3% down, 3.5% down, you can get into a house, with very minimal cash out of pocket, and there's even down payment assistance programs, with people that, if getting into a house is their top priority and they really just want to get into it ASAP and they don't have money out of, in their bank account, we can get them in with almost zero out of pocket. So.
Yeah, I hear a lot of the 20% down and people I can't buy a house because I don't have that much to put down. But I think that's a definite misconception. So
Other than, down payments, that kind of stuff, what other misconceptions do people have or mistakes first-time home buyers make?
Yeah, I mean, credit score, people think that you have perfect credit, if they don't have a 700 or above or even, 750, they can't get a house. But again, that's not the case, right? There's FHA programs out there that, they'll let you get, a loan with a minimum of like 580, sometimes even lower was, give manual underwrite. But, even conventional, you can get 620 and above. So, it's pretty easy to get a mortgage, and again, that just kind of overcoming that hurdle, of just, not letting the credit score or the down payment holding you back, I think it's huge.
Sure.
Yeah.
Yes, no, that's awesome.
I think when I'm talking with a lot of first-time buyers, are like our generation of millennials and Gen X just think getting a home is going to be really, really difficult. And it's hard when you have your parents telling you, well, I bought a house for $30,000 and I only had to put $2,000 down. And you're like, well, yeah, that's not the case anymore. But I think that deters them from even researching into it and learning more about what you actually need.
If you just think, from a perspective of first-time home buyer, you're looking at the price tag on the home and you're like, oh my gosh, this is such a huge purchase.
Yeah.
But honestly, you could be buying a house with less money than you spend on a car.
Sure. Yeah.
And you're probably like rent these days is so high. I mean, your mortgage and rent, at least you're building some equity in your home by owning versus pay your landlord.
So walk us through when you come across, well, Stacy, they're probably going to find you first-time home buyers.
I hope. I hope. I've got some really good recommendations.
And walk us through the process, getting connected with the lender, and then how it looks on your side of things.
Yeah. So when I'm working with the buyer, we typically sit down and do like a buyer's consultation, and I kind of feel out where they're at and then connect them with the lender that's going to be best for them. Like Dom has some pretty cool programs that would fit for specific buyers. But once I connect them with them, Dom, I'll let you take over because that's where the real fun stuff.
Yeah. So, I love to talk to the first time home buyers, and kind of get their feel, why they're buying the house in the first place. What are their reasons? Sometimes it's just, they're just sick of renting and they want to own something, right? And build wealth. And then, so you kind of talk to them, build a relationship with them. And I love that. And then, it's always smart to get pre-approved before, you go house shopping, right? Because that gives you.
We appreciate that.
We definitely appreciate I feel, equipping a buyer with a strong pre-approval is essential because essentially it gives them, a gauge, a spectrum of like, okay, they know exactly, how much house they can afford. They know, when they walk into a house with a certain price tag, roughly the monthly payment on it, right? So they're at ease when they're walking into these houses. So then they can just focus on the actual house. And find the amenities in the house that they like, right?
Yeah, making sure it's right for them.
Yes, exactly. That's where you guys come in, obviously. So my job, is talking to them, understanding their why, and then, getting them pre-approved. And that really is like a 10-minute, 50-minute application. They can do it online. They can do it over the phone. I can meet them and, walk them through it myself. And then, they'll have to submit documents because I don't want to, I want to have a strong pre-approval, and they can fill out whatever they want in the application. But I want to vet it, and make sure their income is stable, and everything is in line. So that way, when I say, hey, you can afford 300,000, I mean it,
It's legit. Yeah.
I always wonder, you said, people can fill out what they want in the application. Do you oftentimes get something where does it like spit out for them maybe what they're, it could be pre-qualified at, and then you get into the nitty-gritty and get more documents. You're like, well, actually, we're kind of here. Does it change often on
Yeah,
documents start coming in?
it does sometimes, like, sometimes people, that they'll miscalculate their income, maybe they're hourly or something, and they miscalculate their income. And so on the initial application, it looks like, oh my gosh, like, you only have so much debt, and you say you make this much money. But then I look at their W-2s and their tax returns and everything like that, and it comes down a little bit more. So, as lenders, we have to follow guidelines ourselves. And so, again, that's the importance of getting the documents so I can work my magic on my end, and then, have that conversation with them afterwards. But, usually it's pretty close.
Yeah.
Yeah.
So kind of on that note too, what are the basics, I guess, of somebody just coming in and wanting to get pre-approved? What kind of documents, what kind of information do they need from you?
Yeah. So usually you'll need your W-2s, your like, recent pay stubs, your bank statements, just so I can see, okay, how much money do you have? How much money do you make? And I'll pull your credit, right? So you'll give me authorization to do that. So they can look at your debt and make sure that, the future debt that you're going to be taking on with a mortgage, will not kill you, and so that's huge.
Sure. Yeah.
You brought up debt to income ratio, and I feel like a lot of first time home buyers, that's kind of like, what is that? What is that? So do we go a little bit in detail on that and what that looks like? And I guess do you ever have people that you guide like, hey, you're not quite there now. Like these are the things you should pay down, and talk a little bit about.
Yeah, sometimes, people, they rack up a lot of credit card debt, right? So, and it kind of sits in the back of their mind because maybe they're used to paying it down, but they don't realize that, hey, this plus the new mortgage debt, will put you slightly over where you need to be, right, to qualify. And there's ways to get around that. You can always get a cosigner, if they're comfortable themselves, with handling both. But because my guidelines say I can't approve them on their own, we can always get a cosigner in there to help, get around that rabbit hole. But, usually it's, the guidelines are there because we don't want them to, obviously lose the house, once they buy it. So, we want to make sure that they're financially stable.
Yeah.
And actually, when we met, we had kind of talked about when he's like pre-approving someone and maybe they don't quite hit those guidelines, he can actually give like step-by-step guidance on what you can do to get within those ratios that you need to be, and like take actionable items and like checklist it, like, hey, I need to pay off this debt, or hey, I need to pick up a side job and get a little bit more for my savings for a down payment. And he can look at their whole credit history and kind of guide them, which I think is a really big deal because not everyone gets a cosigner and you still want to buy a house. So you need some steps to take.
Yeah.
Yeah, I think it's good to have a plan. I mean, I've had buyers in the past that just kind of get shot down on getting pre-approved. And then, I'm like, okay, what do you need to do? And I think it's important to guide them on, okay, well, if you were here, this would have helped to get there. So
Yeah, and I think that's an important point to touch on because, my job as a loan officer, it's not just to get the pre-approval out there, right? And if they don't qualify, it's not to say, oh, tough luck, come
I'm never gonna
you fix your problem.
Right.
Yeah.
It's my job to help that fix it because I'm the professional, right? So, whether it's debt to income or, really credit. I've had a lot of people come to me with, and they said, hey, I went to this other lender and, they said, come back to me later because you had bad credit. How can I fix my credit? And so I've taken the time to work with a bunch of people and get them in credit repair, and I love that because I know, ultimately I'm the one helping them. So when they are ready to buy, I'm going to be that hero to them. And I love that,
well, and that sort of thing brings referrals too and whatnot. Just so I'll recommend you for a future.
So you mentioned credit quite a bit. Obviously, how much does credit score affect borrowing limits, terms?
Yeah, I mean, it definitely affects interest rates, because ultimately, credit score, it reflects, their credit worthiness, their history, right? Because if you default on a payment, your credit score is going to drop. So when a bank sees someone with a higher credit score, they say, oh, we can take less risk on this person. So we can give them we can offer them lower interest rates, right? And then, also it could inhibit you from, qualifying for a mortgage sometimes. But at the same time, credit is always temporary, right? So it's like, you can have great credit, But if you have bad credit, there's always ways to get around that. And, obviously the higher your credit score, the better interest rates you're going to get, right?
Sure. Kind of more just a snapshot in time per se. You can repair it, credit score repair it, and it can improve over time. So
Yeah.
sure.
Do you ever have people come to you that don't have credit? Because I have some great tenants that when they started with us did not have credit because they're too young. Do you ever deal with that? Or people come to you?
I haven't personally a whole ton. I know there's ways to get around it, if you're
Mhm.
manual underwriting and stuff like that. I had one person come to me and I pulled his credit and it was like really low, like really low. And the reason was because he just didn't have enough history, right? It
Mhm.
wasn't seasoned enough. Well, I think he was like a month or two away.
Oh,
So it was literally like, hey, you let that season out for 2 more months, you're going to hit that mark where they're actually going to grant you a credit score,
Yeah.
and we'll see what that looks like, right? But
Sure.
yeah,
But
but
other quick ways, I mean, that guy was 2 months, but is there other quick ways you can repair a credit score?
oh, absolutely. I mean, yeah, you can always sometimes, maybe they're utilizing too much of their credit card line, right? So it's always, maybe decreasing that. It could be just, making your payments on time. Simple things like that. Maybe they don't have an open revolving line of credit. Some people have that, where they've gone through, third party credit, forgiveness companies, which honestly is pretty unhealthy for your credit.
Sure.
But then that kills all of your revolving lines. And so this guy came to me one time and, so I told him, hey, you just go up and like open up a simple credit card, use it minimally, right? So you keep that utilization down and, you're making on-time payments with that because you can. And then that gives the bureaus like positive signs for growth in the future.
Sure.
Yeah. Credit is such a beast sometimes.
It
Like you
is,
want to
yeah.
use it
Yeah.
to show that you're worthy, but you also
wanna use
like
it
don't
too
want to.
much.
Yeah, you got to use it with a
Yeah.
reason. But yeah, he's got really good tips and tricks. And again, it's really nice when you just don't know where to start. And there's so much information on the internet. You don't know what's right. Like sometimes people will close the credit line. I'm like, that's your longest credit card. You don't want to close that because you're
Yeah.
heading off all that history. So
Yeah, and home buyers, they can go to like nonprofit organizations for credit, advice, but I think loan officers should honestly be better about taking up that task because,
Sure.
like I have ways of doing like score navigation where I can literally print off instructions for short-term and long-term credit jumps, and I send it to them and I can walk them through it, and they can see on this specific card, pay down this amount to the dollar, right? And it'll project like, with this, decrease, it'll jump your score like 30 points or something like that, So that's awesome. Yeah.
No, that's a great resource to have.
Yeah.
For sure.
Are there any credit myths out there that you just hear all the time that you're like, no,
Squash
not the way it is?
Credit miss. I mean, I think we already talked about, like you need to have a super high score. I think like people think doing a hard credit pull, like everyone's scared of that word. And they think that that's going to drop their credits, like 100 points. But I'm like, no, actually we'll only drop it for like 5 points maybe. And
That's funny. I've definitely had buyers that are like really afraid.
you can recover it within like 30 days.
Oh,
So
interesting.
yeah, so it really is nothing to be scared of. And also, if you do shop lenders and they need to give you pre-approvals, you have like a 45-day window where, if I do a hard pull and then you go to lender B and they do a hard pull, that only counts as one.
Did that change? Because I was thinking it used to be a longer period, but now you said 45 days.
I think it's 45 days.
yeah, it kind of depends on which credit because there's like 52 types of credit that people can pull. Like you have your like credit wise on your credit card. You've got your FICO score through like Experian and like banks pull certain ones. But I've heard anywhere from 2 weeks to 45 days. I always tell my clients to do it within like 2 weeks. One, so they get it done and actually shop around because if you delay it, like you're not going to do it.
Mhm.
And then two, like you've already got all your paperwork all together. You might as well just send it all at once, just get it done. So I always tell my clients 2 weeks and then you're within that time frame. And I'm sure it's closer to the 45 days, but
Yeah.
let's take some action. Honestly, yeah, it's not gonna. You're not going from an 800 to a 400. Like you're okay.
Yeah, right.
So once you've got them, like they're pre-approved and Stacy helps them purchase a home and they're under contract, what are some don'ts that buyers should know when they're in the home buying process? They're under contract.
I mean, you guys know this, right?
We do.
We're gonna
There's a big
We buy also the cars, all the furniture, everybody got credit cards, right?
You got the nearest Lamborghini, deal with tape, and take out the largest one you can. No, I mean, yeah, obviously it's just don't go outside of your financial comfort zone. Like don't take on any big new financial burdens, right? So that's like the biggest thing. And it's just, don't kill the deal before you get the deal, right? So
The other one I see is changing jobs. Sorry, I
Oh,
just want to make sure that
yes.
comes in there. Please don't change jobs. And if you are changing jobs, keep it in the same field.
Yeah, you can talk a little bit about that because I've had buyers before where, like, yeah, unbeknown to me, they change jobs in the little transaction. But do you have some, guidelines of if it's within the same field?
yeah, so
Well,
usually,
okay.
if it's within the same field, like I actually had a buyer. I had pre-approved her, and then I called her for a follow-up about, I think it was like a week later or something, just asking her how the home shopping thing was going, and she didn't respond. So I couldn't get her to respond for like another like week, and then she finally, called me back and was like, "Hey, I've been embarrassed. I just switched jobs and I quit."
Oh,
And I was like, "Oh, well, do you have another job lined up?" And she's like, "Well, I'm, kind of in that middle ground where I'm finding one, but I'm not quite
yeah.
there yet." So, we had to wait. But the point is she got a new job in the same field. And, if it's like a W-2 where you're making a salary or, your hourly, right? Commission is more iffy. But, we can always get that new job offer and get the salary, projection on that note. And we can always, use that income going forward.
I always just tell my clients, if you're
Yeah.
worried, just call your lender. They're there to talk to you. They'll answer the phone. Like, just confirm with your lender before you're like
Yeah.
doing crazy things. So
Yeah, not gonna lie, I've had people like, we're gonna go shopping at Nebraska Furniture Mart. I'm like, okay, you should maybe talk to your lender. We're gonna make sure. Are you opening a credit card for that? Or how do you pay for that?
or washers and dryers if the house doesn't come with them and they buy it. I'm like, no, tell your parents to buy it and pay them back. It's something.
I mean, sometimes they can do it.
Yeah.
Sometimes they can do it.
Yeah.
It's just about knowing yourself, right?
Can you share a real life example of someone who used a mortgage to refinance high interest consumer debt?
So I actually love this topic because I think in today's day and age, like everyone's scared of the interest rates because the numbers are higher than 3 and 4, even 2.
We were spoiled. Those are normal.
Did so no.
Especially the loan officer, I feel like I run into all the time where people are like, the interest is so high, but I'm like, historically they aren't that high,
This is like average.
So it's about like kind of resettling people's mindsets into like, this is an okay rate. Getting this, like I have a 6% rate in my house, and I'm like, that's an okay rate,
Right.
like, but I had a relative of mine actually, and I remember going over their house and multiple times I kept overhearing that they said they were like really financially stressed, and they had a rate, when they bought back, like around COVID, or when they refinanced this, they got a really great rate. And I remember, talking to them one time when I was a new loan officer, and I was like, "Hey, have you guys ever thought about a cash out refinance? Because you have a ton of equity sitting in your home because of the appreciation over those last couple of years. Have you ever thought about taking that equity out and then, paying off all your debt?" And they're like, "No, because we're going to have to go from a 2.9 to like a 6 something." And I was like, "Well, let me explain something to you." So this is what I really want people to hear is like, it's about overall financial status, overall financial burden and debt, and you can totally relieve yourself of like 50% of your monthly debt payments by, consolidating all that debt payment into one mortgage. So, I think the average American homeowner has around $300,000 in equity in their home. That's the average. Obviously, it varies per person, but there's a ton of homeowners. And I think the average, household has about like $20,000 to $30,000 in high interest debt. And the credit cards they're using, it comes with, like 20% interest rates. So yeah, at the end of the day, this family member, I was able to actually help them, consolidate their debt because they weren't able to make their payments. Their credit was, like tanking. So it was, obviously for the better. And I think their overall monthly debt payment, it was consolidated into one mortgage, and it dropped from like, I'm not gonna say numbers, but it went like to half, less than half of what they were paying before.
That's incredible.
And so imagine that, it's being lifted like that, just all that burden just lifted off, it's just amazing. So,
and it's just it's hard when you're in the moment because you're looking at a 2% interest rate and you're like, oh my God, they're 6%. Like I'm going to be losing so much money.
Right.
But then you forget you're paying 22 to like 30% now on credit cards.
Credit cards, yeah.
And
so all of that, the average rate that you're paying overall on your debt is a lot higher than that,
It's just,
Sure.
it's hard when it's probably your biggest asset and you just think, oh, because it's my biggest asset, I'm going to be losing so much money by increasing. But
It's always interests me is kind of funny, I guess. People complain about, interest rates being so high and it's, 6%, whatever average.
Yeah.
But then they think about their credit card and it's like, well, how much do you carry on a credit card every month? And then that's, 20, 25% or paid for, whatever it might be.
Yeah.
So
The 50-year
percent.
interest rate is like 7.5. You talk to your grandparents and they're going to be like, these rates today are great. I'm telling you right now.
Yeah.
My aunt bought at 18% and she's like, wow, that's nice.
Yeah.
Got a deal at 18%.
Yeah, she was happy to buy at 18%, and I've got people at 7 like, oh my God.
Well, as we wrap up, what is the best way that people can contact you and get a hold of you?
Yeah, absolutely. I mean, I'm very active on social media. You can find me on Instagram and Facebook, but I also you can just go to domarias.com and that will bring you to anything you need. My phone number, application link, team website, anything, YouTube. So you just go to domarias.com and you'll find me.
Awesome. How do you spell Arias?
Okay, so it's DOMARIAS.
All right. What about you, Stacy? How do they reach you to help them with the purchase?
Awesome. Probably shoot me a text. You can find me online, but shoot me a text at 402-413-9558.
Perfect.
Awesome.
Thanks
for joining.
us, guys.
So much, guys. This was awesome.
That's a wrap.